Good morning and good afternoon to all of you joining us today for this very exciting Access to Capital webinar. My name is Xiomara Pena. I'm the Southern California Outreach Manager for Small Business Majority. Today's program is funded through some funding that our organization has received from the Sam's Club Foundation in order to bring this education to small business owners and entrepreneurs on, as I said, one of these very important topics like how to find money to grow or start your business. So a little bit about Small Business Majority. We are a national small business education and advocacy organization that was founded and run by small business owners, and we've been around since 2005. We have about 10 different offices located in Washington, D.C., California. We are actually headquartered in California in Sausalito. And as I mentioned earlier, I manage all of our Southern California operations here. We have offices in Colorado and Illinois, Maryland, Missouri, New York, Ohio, and Virginia. And we're continuously looking to broaden our reach and reach as many small business owners through online engagement as well, such as these webinars. We focus on issues that are of top importance to small businesses, and there are different metrics in terms of gauging what small business owners look like. The SBA has a certain number. The state-specific organizations may have different numbers or measurements of gross income that measures how they recognize small business owners. We recognize small business owners as any business with less than 100 employees. Although in our work, both in person and online education, we're finding more and more that we come across micro businesses, those businesses that have less than 10 employees. And so that's who we're focused on. We do also work a lot with self-employed individuals, and those issues that we work on and are focused on include access to capital, workforce, healthcare, retirement, taxes, technology, and energy savings. And our work is supported by extensive research. Moving on, a little bit about our model. So our work really does fall into three buckets: research, advocacy, and education. So we typically start with extensive research, which includes polling and economic studies to gauge small business owners' views and speak to their bottom line. We then take that research and we work to enact change by elevating small business views in public policy debates. We help small business owners craft letters to the editor, op-ed pieces. Oftentimes as legislation is being crafted, not enough is done to make sure that the small business voice is truly represented on the impact of legislation. And so we work with small business owners to make sure that their views are recognized both locally, making sure that maybe they have access to their local legislators, or at a national level by connecting them to a media outlet that can maybe put out a story about their perspective on healthcare and how it impacts their business. And then the last bucket is education. We partner with various different business groups to hold seminars, roundtables, and educate small business owners to find information that they need to be able to grow or expand their business. We do education in a couple of different ways. So one format is online. So today you are part of our online education by being here with us on this webinar. But we also have in-person events. We have tabling events where we partner sometimes with expos to make sure that we're passing out fact sheets on different pieces of information or different issues that we're working on. And we also leverage our network. So we really like to communicate with small business owners in a way that takes your viewpoints into consideration. And so our organization, we're not a membership-based organization, very different than a chamber, for example. All of our programs and services are free. If you come to an in-person event, those are typically free. The online webinars, free. So as joining part of our network would include maybe signing up to a newsletter so that you have access to a monthly or quarterly newsletter about things that are happening in your state or at a national level. So a little bit of an overview here for the things that we'll be discussing today. We're going to talk about some background and research. We're also going to talk about some key questions that you as small business owners should be asking when seeking funding. We're also going to be then talking about the funding landscape, which is huge. There are so many different avenues and different forms of financing that are available in today's market for you to be able to seek the money that you need to be able to grow or start a business. And so we'll be sharing a little bit about some of the most common forms of traditional lending and non-traditional lending. And then Seal will finish up by really talking about community development financial institutions and the value that CDFIs can bring to being able to access financing if you're unable to secure traditional lending through, let's say, commercial bank. We're going to talk about the Small Business Borrower's Bill of Rights, or BBOR, which is a series of, it outlines some topics that are important to keep in mind when you're seeking alternative online financing, which is a huge topic of discussion. So I'll be sharing some information towards the end of the workshop on the BBOR and some resources and tools. And as I mentioned, I've seen some folks enter the presentation. So if you guys at any point have any questions, please feel free to enter them in the chat box located on the left-hand corner of your screen. So when we're talking about access to capital, I mentioned we focus on doing some research before we start working on an issue. And so we looked at some scientific polling. We conducted a scientific poll that indicated that about 90% of small businesses say that the availability of credit is a problem, with about 90% saying that it's a serious problem and about 5% saying it's not really a problem and another 5% saying they're not sure. The availability of capital is crucial for small business startup, survival, and growth. We know that. And inadequate access to capital continues to be a top issue facing small businesses. We also know that small business bank lending, that commercial lending that comes from your traditional bank, is down by about 20% since before the Great Recession. When we're looking at women and minority-owned businesses, those firms face significant barriers. They're typically smaller in size, they start with less capital, they have lower approval rates for bank loans and smaller dollar amounts, and they're more vulnerable to predatory lending. The cost for underwriting a loan at a large bank, let's just say Chase or U.S. Bank, the cost for them underwriting a loan of $1 million and underwriting a loan of $100,000 is the same. And yet for the bank, it could be riskier to lend out that $100,000 versus the $1 million. And that could be a series of factors. It could be assets. It could be the cash flow of a business. It could be the length of time the business has been operating. And so those are some of the regulations that have restricted the financing on the commercial end. And so we see that this is an area where the traditional banks are having a difficulty in approving loans for small businesses. But now that I've given you the bad news, the good news is that, as I mentioned earlier, there are more funding options available than ever before to help you start and grow your business. And let's just look at some of those for a quick minute. You see here the sources of funding. This could be family and friends, personal and business credit cards, your home equity. A lot of business owners start up their business by their personal savings. They save up for a couple of years and say, okay, I'm ready to start my business with the savings. Microloans. If anybody has no clue what a microloan is, well, you're in for a big surprise. This is a really good opportunity for you as a small business owner to seek and secure financing at an affordable rate if you're unable to secure a traditional bank loan. Like let's say you just started your business, you've been in business for 6 months, most larger commercial banking institutions won't lend because they need at least 2 years for you to be in business, or 2 years of tax returns for you to for them to even consider approving a loan for you. So microloans, if you're seeking that small dollar amount, maybe $50,000 or less, to get some more cash flow or to purchase a piece of equipment, this could be an option for you. Folks look at angel investors, which shows like Shark Tank. This is something that I'm coming across more questions about in the work that I'm doing in the field, by folks asking, okay, how can I look at angel investors as a possibility of seeking equity financing or equity-based financing. There are economic development agencies. There are startup programs or business plan competitions. If you are a member of a chamber, it's important to note some of these chambers host a annual event for their members, or partner up with another chamber to host an annual event. And part of that will be some form of a competition. There's a group here in California, the California Hispanic Chamber of Commerce, and last year they started a business plan competition. So 3 small business owners submitted a business idea, and they were allowed at the conference to present their idea, and there were some investors there, and one of them secured some investment in their business. So that would be an option for you, perhaps. There are SBA Loan Programs, which are guaranteed programs. I'll talk very briefly about those in a later slide. Traditional bank loans. There are newer forms of financing like online cash flow lenders or online marketplace lenders. Crowdfunding, one that I really enjoy talking about. There are incubators and accelerators. These are groups that you may be able to access locally, and then you have other forms of lending like merchant cash advance, which has its disadvantages being that the interest, when you look at it, it's sort of really high, but you do get cash up front, but that cash can come at a very high cost. So I'll talk also briefly about MCAs because some folks do look to get them. Community banks and credit unions. So as you can see, there are a wide number of different sources of funding that one could look for when they're looking to start or grow their business. So some key questions to ask when seeking funding. These are all really important questions to consider, but I would ask that you really focus on the first 3 because when you're talking to a lender or any financial institution, those 3 questions are extremely important for them. I've came across some lenders in our work, and they tell me, Xiomara, I can't tell you how many times a small business owner came to my bank, sat down across from me and said, hey, I'm interested in growing my business, taking the business to the next level, and I need some money to do that. And the banker says, okay, how much are you seeking? And they'll say, well, how much can you give me? And that, to the lender, is an automatic no. And the reason is because it showcases to them that you haven't fully thought out what you're utilizing the funds for. And so if that answer, for example, had been, I need $100,000 because I'm purchasing new equipment for my bakery, and I plan to repay this within the next year, over the next year, and here's my cash flow and everything, all my financial statements that indicate that I'll have the money to do that. But coming with a little bit more of a structured plan could definitely help you out as you're having those conversations. And another thing to keep in mind is even if you're not ready to seek financing tomorrow or today, it would be wise for you to go to your bank and see what kind of programs they have available for small businesses and start developing that relationship with a banker, because as you grow, and again, maybe you don't need it today or tomorrow, but as you grow, by the next 2 years when you are looking for financing, that could be something that you're ready to apply for, and you're going to be able to seek and obtain financing at a lower cost. So the first three are really important. What do you need the money for? How much money do you actually need? And how long will it take you to pay it back? Some other questions to consider, and these other questions, they can help you really narrow your search in options. So for example, what is the current financial shape of your business? If you're seeking traditional financing through, let's say, a commercial bank or a credit union, you do need to showcase with any lender cash flow, but there are some lenders like CDFIs, the Community Development Financial Institutions, and micro lenders that have more flexible lending standards that could perhaps look at your financials and say, well, there was a dip in business for these 3 months, and this is the reason why. They can be more flexible in understanding that. So perhaps just by answering that question, you say, well, I know I can't go to this financial institution, but I know that this is an option. So it helps you kind of narrow your search there. How long have you been in business? If you're a startup or have been in business for less than 2 years, trying to get financing through a credit union or a community bank or your traditional bank probably isn't going to happen. And the reason, again, is because of those regulations that have been put in place to ensure that the lending is affordable to small business owners. They also won't lend if it's a risky business. If you haven't been in business for 2 or more years, how do they know that the business is going to continue to succeed? And so that's something to also keep in mind. Again, a CDFI, a micro lender, and SBA-backed loan product may be something that you might consider if that's once you answer this question. How much collateral, if any, do you have to put up for the loan? Very important. Folks, I've came across some questions in the past where folks will say, well, I have a corporation or an LLC, and I have started accumulating business credit under my corporation. So can I apply for a loan through my corporation only using my business credit? And the answer is no. When you apply for financing, it's you as a person becoming personally liable or offering a personal guarantee of that financing that you're obtaining. And so part of that also requires that you put down some collateral. You need to have some skin in the game. That will make the lenders feel more comfortable in offering you and extending some credit to you. How quickly do you need the money? If you have time, I would definitely encourage you to apply for an SBA guarantee type of product. Sometimes securing those loans, because they are under a federal program, take a little bit more time. But if it's really in the paperwork, if all your papers are in place, if you have all the required documents that you need to submit, that speeds up the process. But if you needed the money, let's say in a week because you just secured a huge contract, then you as a small business owner have to really sit down and make a financial decision, a business decision to be able to say, okay, I don't have the time to, submit this loan. I need money within a week because I know if I don't have it, I'm going to lose this contract. These are my options. Maybe it's a responsible online lender that you're going to, or maybe it's a micro lender that you've already started developing a relationship with. So that's another important question. And then, are you seeking debt or equity financing? Debt financing is typically financing that you will repay with some form of interest. This is your typical credit cards, your bank loans, a credit union loan through a credit union, versus equity financing where you're typically giving up a piece or share or portion of your business. So that could be like the Shark Tank model when you're looking at investors or venture capitalists, providing you with some equity in return for stake in your business. Now we're going to move into talking a little bit more specifics about some of the options that I mentioned earlier on. So when it comes to a community development financial institution, otherwise known as a CDFI, these financial institutions offer loans usually less than $250,000 for entrepreneurs who are typically ineligible for traditional bank loans. And they may be used for a wide range of business purposes. also important to note that CDFIs are dedicated to responsible and affordable lending to underserved entrepreneurs and low-income communities. They offer revolving loan funds through private and government funding, often provide in-depth support that includes mentoring and technical assistance. And not all CDFIs have this component, but some of them do. And the value there is, let's say you are looking for financing, you've started your business plan, but you're coming across some challenges in tidying up your financials. Sometimes financials are the hardest things to do, especially if you're a startup. How do you project? How do I know how much product I need to sell to break even? There are mentors and consultants that can provide resources to you for free through some of these technical assistance centers to be able to have that help to get your business plan in order, so when you're looking for financing, your business plan, your financials are all ready to go. And many CDFIs offer microloan programs, those programs I talked about with less than $50,000 worth of capital. Now, some of the pros, these are competitive rates. The average is between 6 to 10% interest. When you're looking at another pro, these are great options for entrepreneurs that are unable to secure traditional bank loans. So like, let's say your credit had a little dip or you had a bankruptcy, but your cash flow, your collateral, everything else is in order. They are more flexible in their lending standards. Another added benefit is, as I mentioned, the technical assistance piece. Having that support can really be helpful in and as you're structuring your business plan and other thinking through maybe the marketing side of your business plan, or et cetera. Some of the negatives, these are smaller value loans, and it may not be sufficient if you're trying to start some sort of like pharmaceutical company. You might need a larger investment than just $250,000, so this may not be an option for you. Another negative, personal collateral and guarantee is often required. And Seal will be talking a little bit more about CDFIs in more detail. Another source of funding is SBA, the SBA Loan Programs, or the SBA Guarantee Programs. So the U.S. Small Business Administration guarantees and can guarantee a portion of a loan to provide an incentive for institutions to approve loans to small businesses that are riskier borrowers and not poised to obtain traditional bank loans. So the SBA is not a lender, but a guarantor. And the loans could cover a wide range of uses, including startups, working capital, inventory, real estate. So essentially what happens is let's say you submitted a request for financing to a bank. And everything looks okay. Your 5 C's of credit are there, but there's only some concern around your collateral. The collateral is not as much as they'd like it to be, let's say. The SBA provides an incentive for lending institutions to approve certain loans by indicating that if you default, they will cover up to 80% of that loan. And so this provides an incentive for these financial institutions who may not extend that credit to otherwise extend it. Again, there are still some things that have to be in place in order for you to secure the lending. And another thing to keep in mind, their primary programs are a 7A program, which is for small business owners that have a designation as a minority-owned business or a woman-owned business. You have to get a certification, and that could be at a local level. And then a CDC 504 loan program is for commercial real estate. So if you're looking to purchase commercial real estate, we would definitely encourage you to connect with a community development financial institution or to find out more information about a CDC 504 loan program. Now, they also have programs available for microloans, disaster relief, export assistance, and veteran and military structured small businesses. Something you should know, they are very competitive rates. They typically have longer loan terms. They don't have any balloon payments, and you can work with an SBA lender to gather the required documentation and review your application checklist. So in order to find an SBA-approved lender near you, we've included a link, and once you have access to the PowerPoint, you can go ahead and click on that, and that will take you directly to the list of approved lenders. And the SBA also has various different resource providers, such as SCORE, which is a mentoring program if you're looking for some form of mentoring. These are retired small business owners that volunteer and dedicate their time to helping current and existing small businesses. They have women business centers and small business development centers, which are national. You might already have came across one of these groups, but if you haven't, definitely do a Google search and find out where's your local technical assistance provider. Also, I'd like to note that our organization does have an Access to Capital resource portal, and so we do have several technical assistance providers listed there. You can also find information there through that link, which will be shared at a later slide. Another source of funding are community banks and credit unions. Now, they have long been key allies for small businesses. As you can see towards that right-hand side of your screen, the small business loan approval rates back in 2014, when compared to the big banks, community banks and credit unions definitely approved many more small business loans than the big banks did. Now, important to note, community banks are typically small, locally owned and operated, and their primary focus is on supporting small business. Credit unions, these are not-for-profit financial institutions. In order to obtain products through a credit union, you typically have to become a member of that credit union, and not all of them offer small business loans. So here, some of the pros, these are low interest rates, long loan terms, so these could be multi-year. You may have to repay over the set of 3 years versus 1 year, which would reduce your payment amount on a monthly level. They have a commitment to local community. They offer great customer service and a personal touch. Some of the negatives, these could be long application times, high hurdles, or high hurdles such as being in business for 2 or more years, having great credit, much higher collateral requirements. Another negative could be these are tightly regulated. So again, unlike the CDFIs that I talked about earlier on, they may not have any limited flexibility to offer, to overlook maybe your credit score or your collateral or your cash flow. And another negative could be that they have less range of products and technology than those bigger banks. We have some resources there at the bottom. Now I'd like to very briefly talk about alternative online lenders. These are a new breed of online lenders that are innovating small business lending and expanding new options for entrepreneurs. They offer simple, streamlined application processes and quick approval and delivery of funds. The use of technology and new sources of data are used to assess risk, and online lending right now is largely unregulated at this point. They typically have higher interest rates than the banks, and also here bolded, not all online lenders are equal, and some players do mask very high rates. And as a small business owner, you should proceed with caution when we're talking about these options. So let's start with online marketplace lenders. These are peer-to-peer lenders that connect small businesses with institutional and individual investors, and the capital is obtained via term loan, very similar to a traditional bank loan with it could be multi-year, a stated APR, and they're focused on transparency in pricing and overall process. So that perhaps could be an option for you if you're looking for some lending. Now, the cost of the interest is still going to probably be higher than that which you can obtain through a CDFI, and probably a lot higher than that of which you can obtain through a bank. So in the event that you're unable to secure lending from those lenders, then you might see this as an option. Now, the online cash flow lenders, this is a separate set of lending that is currently existing in the online space. Online cash flow lenders generally offer short-term loans, typically used for working capital. Now, by short-term, we mean that this has to be repaid typically within 6 to 12 months. These are very high interest products, 20 to 50% plus. And when we say 50% plus, there have been several reports that are analyzing the high cost of these online loans that are unaffordable to some small business owners. I've seen them as high as 75%, 125%. And yes, that can happen if it's not repaid in a timely manner. Your interest continues to compound. They use non-traditional underwriting algorithms, including social and online data, and the loan payments are made by daily deductions of a fixed amount or percent of sales rather than citing an interest rate. They do require access to business bank accounts or payment systems, and with these products, you should be cautious of opaque pricing and high interest rates. And so in order to be aware of, how do I know that this is an online cash flow lender or that this is a product that makes sense for me, we have came up with a checklist of questions that you can ask. So I'll share that with you in just a moment. Another source of funding is a merchant cash advance. A merchant cash advance, or an MCA, provides cash up front in exchange for a portion of future sales, and this is where a provider takes a percentage of the credit card or debit sales daily until the loan plus a premium is paid back. So they're technically not lenders, but credit card payment processors. And so in order to obtain financing through an MCA, they don't really run your credit. They don't need a business plan because, again, it's not technically a loan. It's a credit card payment processor. Now, they do offer quick and unsecured funds, but it does come at a very high price. These are essentially payday loans for small businesses. Now, a tip, an MCA should be a very last resort. You should be cautious of deceptive and aggressive sales or advertising. Some things we put keywords here, but some red flags to look out for: fast cash, no credit score, no collateral needed. As a small business owner, you should properly do some cash flow planning to make sure that you have enough credit card or debit card sales coming in on a daily basis in order to repay this in a timely manner. Because the longer that you let that MCA live for, the more interest you're paying on a day-by-day. And as a small business owner, you should also carefully review and understand all the fees, the terms, and the penalties. A lot of these products do have prepayment penalties, and so even if you try to pay it off early, you may be hit with a fee. So just read the fine print there. Another form of financing is crowdfunding. Now, in crowdfunding, entrepreneurs raise funds by reaching out to a large number of people or investors through an online platform. And so this is lots of smaller sums of money that takes the place of one or two large investors. So you would create an online campaign about your venture or your idea, indicate the amount of money you're seeking and what it would be used for, and what contributors or investors would get in return. And so the best campaigns are really those that inspire people to donate or invest. Ultimately, you want to create something that showcases appeal for folks to be able to open their wallets. And so one of the examples I always like to share with folks, there was two of the most popular crowdfunding platforms are Kickstarter and Indiegogo. Now they both operate differently, but if you haven't had the opportunity to look at crowdfunding examples in the past, I would definitely encourage you to go on to either one of the sites and look at some of the existing campaigns that are up and running. There's one that about a year ago, these college students started. It was a fidget cube, and now fidget spinners were a popular toy for younger children. But this happened about a year ago. They had this idea of innovating items that we already have available, but putting it in a cube. And their goal was to raise $15,000. In the video, it started off by talking about a little bit about the anxiety that a person showcased and how fidgeting has helped him overcome some of this. And then it went on to a little bit of humor and how, they've turned it around and have this idea and innovated this product and are seeking funding to essentially mass produce this product because they had only created a prototype, and they were displaying the prototype in the video. They talked a little bit about themselves. It was a short 3 to 4 minutes. And in the body of the below the video, they said, why they came up with the concept, what they were planning to do with this $15,000. They ended up getting $6 million of contributions from folks, and their rewards were, like for $1, they'd say thank you. For $5, they'd say thank you on Facebook, on their Facebook page. For $10, you actually get 1 fidget cube. For $15, you get a fidget cube and a sticker. For $25, you get 2 fidget cubes, and so on and so forth. And they did it right before Christmas, so folks did buy some of these to, give out to as part of their Christmas gifts. So something to keep in mind is timing. The video should be something that you're looking to spend some time on, and also just to keep in mind that if it's your first crowdfunding campaign, a typical ask would be $10,000 or less. And it also is a great way to gauge whether this is a product that folks are interested in. And then one thing that I would also add is it's a great way to market your business, your product, because people that are utilizing social networks could maybe see this and share it with their social networks. And maybe somebody that has been shared this that has seen this post will then check out what this product actually is. So with that, I'm going to now be wrapping up my section, and we'll be passing it over to Seal shortly. But I did want to touch base on what I meant when I talked about earlier, the online lenders and how alternative lenders have stepped in to fill the void of financing through these high-cost, short-term online funding options. Last year, I think that they distributed over $3 billion in funding. And again, they are operating in a largely unregulated space where we've seen an increase in predatory small business lending practices. So something has to be done to ensure that there's transparency and fairness and accountability in small business financing. And so one of the things that we're working on is the Small Business Borrowers Bill of Rights, which has these 6 principles that indicate that small business owners should have the right to transparent pricing and terms, to non-abusive products, to responsible underwriting. These are all things that are put in place in traditional forms of financing, but in the online space, it's the wild, wild west, and there are no regulations at this point. As I mentioned, there is a checklist that we've put together and you'll have access to. These are some questions that you should be asking to any lender to find out really what kind of product you're obtaining and if that product makes sense for your small business. So some of the important questions, what is the interest rate or other applicable rate like an AIR, APR? Are there any upfront fees? If so, where do they go? What are the payment amounts and frequencies? Are there any prepayment penalties? I talked about that earlier on. And you can see here we are part of the Responsible Business Lending Coalition, which helped to develop the Small Business Borrowers Bill of Rights. And with that, I'm going to now pass it over to Seal to continue talking about CDFIs in more detail. Seal?
Yes, hello everybody. Thank you so much, Xiomara, for the great presentation. Very useful information and helpful to really dig into the many things that you do. And also, thank you to the Small Business Majority. You guys are a great partner for us here locally and on a national basis for many other organizations like ours, but most importantly for small businesses. You're an excellent resource of information, as we saw here today in your presentation, and you also are a fantastic advocate for small businesses who very often don't have the time or knowledge to be able to advocate for the things that will really help them succeed in our economy. About me a little bit, I am previously a commercial banker. I worked at a large regional bank here in Denver, Colorado. But I've been with Colorado Enterprise Fund, which is a CDFI, for over 30 years. And at first it was just me working from my basement after I left the bank. But now we have 20 staff and are part of a great network of CDFIs across the country that are doing fantastic work all around the country. So I hope all of you, especially after today's presentation, will find out where you can find a CDFI in your community. One other item about me is that I'm a board member of the CDFI Coalition, which is a great organization also that advocates for CDFIs and all of the types of communities that we serve. So very quickly, because there was already quite a bit said about CDFIs, I'm just going to give a little bit more background. As you probably picked up, CDFIs are mission-driven financial institutions that specialize in delivering affordable credit and capital, but we also give development services and financial services not only to businesses but also to individuals that lack access to capital and advisory services from traditional sources. So where did CDFIs come from and how did they originate? Just a quick word on that. The CDFI Fund was formed in 1994 by an act of Congress through the advocacy of hundreds of organizations and practitioners who recognized that access to capital was a problem in various sectors. The CDFI Fund is a division of the U.S. Department of the Treasury and thus is a federal government agency. And what it does is certifies organizations like the one that I work for, and it also provides funding to them in a competitive application process to be able to leverage local investments so that these institutions can then have the capital to be able to lend and invest in their local communities. And CDFIs really are able to supply the tools that enable economically disadvantaged individuals and businesses to become self-sufficient stakeholders in their communities and in the economy. This includes the financial services, loans, investments, and the training and technical assistance services that help them to effectively use credit and capital. CDFIs also are flexible to be able to adapt their lending guidelines to the needs of their borrowers, and also to accept unconventional collateral and provide education, training, and assistance to their borrowers. There are many types of CDFIs that conduct a wide range of financial activities, including credit unions and community development banks that provide traditional retail banking services like savings accounts and personal loans. There are also microenterprise and small business loan funds that provide small amounts of business capital to entrepreneurs, which is what we will be focusing on in my presentation here today. So just since most people haven't really heard about CDFIs, even though they've been around for over 25 years, I just wanted to quickly give you some of the numbers about CDFIs. So there are 950 or more organizations that have been certified by the CDFI Fund, and they operate in all 50 states across the country. Just in 2016 alone, CDFIs have funded $3.6 billion in projects, which includes over 39,000 loans or investments that they originated. That's just in 1 year in 2016. It includes 11,000 small businesses that were financed, and of those small businesses, they received 13,300 or more microloans totaling $807 million. In addition to business loans, CDFIs of some types finance affordable housing developments, and so there were 33,000 affordable housing units that were financed by CDFIs in 2016. I'm sorry, I'm forgetting to advance my slides here, I think. Let's see here. So there's some information on CDFIs, and here we are with the numbers. Sorry about that. Okay. My organization is Colorado Enterprise Fund, and we are certified by the Department of Treasury CDFI Fund since 1995 for us. We are the largest nonprofit lender serving Colorado small businesses, and we've been around for 40 years serving small businesses in our state. We have funding that comes from banks, some foundations, government entities, and nonprofit investors. And we do have a national rating service that looks at us for our financial strength and performance. We currently have 20 full-time staff. We're all based in Colorado. We provide loans from $1,000 to $500,000. Our average loan is $54,000, and we currently have over 550 loans in our portfolio. Over on the right on this slide, you can see the many types of businesses that we've funded. We kind of like to say from Main Street to high tech, but that includes breweries, manufacturing, food products, outdoor products, restaurants, service businesses, and as I was saying, various types of technology firms. As far as our organization, and again, there are CDFIs across the country that can have similar stories, but just by way of example with us, we've loaned in our history over $63 million to over 2,100 small businesses. In 2016, last year, we made 217 new loans totaling $9.2 million. 36% of our loans are to startup businesses, and 83% of our loans go to women, minority, or low-income business owners that, again, have difficulty accessing credit or loans from traditional sources like banks. Part of the impact is that we really look to help create jobs, and we, in 2016, again, our loans helped businesses that either created or maintained 11 jobs per loan. Over our years, over 17,000 jobs have been created or maintained here in Colorado. A little bit about our loans, and again, this would be typical for other small business CDFIs. We make loans from $1,000 to $500,000. We provide them with as much flexibility as we can in terms of the loan term and the collateral. Our interest rates we really feel are reasonable. It was talked about how many of these loan programs have very high rates and fees that aren't readily apparent. Our rates would range from about 6.9% on up to 14% depending on the loan size, and our fees would be anywhere from 1% to 5%. Again, it depends on the size of the loan and the type of risk. We really try to tailor our loans to the type of needs that the business is looking for. So that's why it is important to know what you need your money for and how long and what the purpose is. If you're a startup business or an existing business that's growing and needs capital to support that growth, CDFIs and small business lenders like us can help you with that. The types of uses that businesses would come to us for include working capital. equipment or inventory purchase. Sometimes they need to improve their property or tenant space, or maybe they even want to purchase their property. They may want to purchase a franchise or another business. Sometimes businesses are looking for real estate loans because they have a building that they want to purchase to be able to operate their business from. We have a particular program financing healthy foods, and there's many other business needs that we see, including helping out with one of those high interest loans that sometimes people do get in trouble with, and we very frequently will refinance not only those types of loans, but also when people get too loaned out on their credit cards, we're able to very often help restructure their debt so that they have a little bit better payment structure and capital. Previously was already mentioned the 5 C's of credit. This is a little bit of what they look like. We look at the capacity of the cash flow for the business, whether or not the business has some personal investment of the owners, the skin in the game. What does the credit look like from the business owner? Are they chronically late on their payments, or are they responsible about the credit that they already have? Character is sometimes thought of as their experience, the kind of business plan. To what extent is the business something that we think will have some traction in the market? And lastly, collateral is important to be able to put up collateral. We are able to be as flexible as we can with collateral, which very often is an issue for businesses in getting a bank loan. Most CDFIs, or small business lenders, will ask for a personal guarantee. That's part of that skin in the game. And sometimes we ask for a cosigner that may be from outside the business. We provide various advisory services that can assess the business, advise the business owner with counseling, help with training tools, consulting with outside advisors like tax attorneys or industry specialists. And we also connect businesses with other small business resources and other business owners that can provide support. So just by way of a couple of examples here, here's a business that is a manufacturing company that makes custom ties. They sell them online and make them custom to order. They're a really exciting company. We've made $112,000 in loans to them. They started with a Kickstarter campaign. They came to us for a first loan of $10,000 to buy a fabric printer. They grew after that and got an investment from an angel investor, and then eventually came back to us for another large loan to be able to help them scale up. And the interesting thing about them is that they hire refugees from the African Development Center and help them be able to integrate into our community here in Denver, Colorado, by having a job and helping them with their transition. Here's another great success story, Maria Empanada. This Latina-owned bakery and restaurant, we've provided 2 loans now. But this is a great story also, where she started, she was from Argentina and immigrated to this country and had this wonderful recipes from her mother in Argentina and started baking for her family and friends. And that the word spread about her, and she eventually decided to open a catering business out of her kitchen and garage. And then the demand was so high that she was encouraged to open a store that we provided a loan for her. She subsequently was so successful with that she decided to open a second location, and then she was able to qualify for a 7A bank loan. She now is opening a third location and came back to us here even just this week to take out another loan to be able to open a third location. So we can really grow with our businesses. They're going to often transition to bank loans and then come back to us because then they need another loan and can't qualify for that additional capital. And one last example, this is a salon. service type of business that is located here, and we provided the build out for her space. She's doing really well. It's called Let 'Em Have It Salon, and we made a total of $146,000 in lending to her. So those are just some examples of the type of businesses we've worked with. I'm going to turn it back over to Xiomara, and thank you very much. And I hope hopefully all of you will check out your CDFIs in your local community.
Thank you, Seal. It looks like the Colorado Enterprise Fund has definitely done a lot of work in the community, and so thank you for taking the time out to join us for our webinar today and share this insightful information to the small business owners that are with us today. I just really quickly had a question about the 5 C's of credit, and as a CDFI, would you guys say that you are flexible, and how many does a small business owner need to have all 5 C's in order to qualify for a loan product from a CDFI, or is that something that is much more flexible than a traditional financial institution?
That's a really good question because we do list the 5 C's. Like a financial institution, we look at all of those, but we are able to look at the whole picture. And so we don't exactly do a score. We kind of say, well, maybe they really have a lot of experience, and they may not have the cash flow because it's a startup. So they don't have the cash flow. But they have the experience, and they're going to be buying equipment, so that provides some collateral. They're willing to guarantee. They've saved up some money for that equity, so they have some capital and skin in the game. So we're able to really look at the individual situation and kind of say, what are the strengths? What are the areas where there's more risk? And maybe there's some weaknesses that really prevent them from getting that bank loan, and that's why we're here.
Okay, thank you. And that's also, with that, that's an important thing to continue to consider. Definitely make sure you look at a technical assistance provider in your region, someplace that you can go to receive some form of either mentoring or guidance or just even a review of your business plan. As we're wrapping up, there are a couple of questions here. We'll make sure that we answer those electronically via email. But with that, I really want to thank you all for joining today's webinar on this very important topic. As a small business advocacy organization, we're continuously looking for ways to provide more information to you as small business owners on these issues that are of top importance to you. So please, after this webinar concludes, take that brief survey, and once you go ahead and complete that, you should be able to access the PowerPoint presentation from today's webinar. Again, you can reach out to me directly if you have any additional questions around any of the material that we talked about today. Make sure you look for Seal if you have additional questions and you're a Colorado-based small business. And last thing, we do have a small business access to capital resource portal, the place that I mentioned. We have a set of information around technical assistance providers. We also have a web page designated for lenders, CDFIs, microloan programs, and an overview of the content that we went over today. If you want to read more about, the crowdfunding material, you can go ahead and check that out. With that, I want to be respectful of everyone's time, and so thank you again for joining, and looking forward to you getting in contact with us again, and enjoy the rest of the week. This will conclude our webinar today.